in light of this change of scheme, we wanted to discuss a comparative analysis of the old and the new provision and what are the material changes that are being brought in the amended provisions. The first is the basis of reopening. As Sriram sir pointed out, the concept of recording reasons to reopen the assessment has been there right from 1948. At the time when the concept of reasons to believe was brought in, at that stage itself, even in the 1922 Act, it was provided in section 35 that the assessing officer is first required to record the reasons and then issue the notice of reassessment. And what was the reason to believe? This was not defined in the income tax law, but the courts had actually held that this means that there is a cause or a justification prima facie that there is an income which has escaped assessment. So these reasons were supposed to be recorded and based on which the notice was to be issued after that. Now, under the amended provision, the concept of reasons to believe has broadly been done away with. The amended provisions talk about a concept which is termed as information suggesting income has escaped assessment. This phrase has been used and this is going to be the basis of ultimately conducting an inquiry to reopen the assessment. Now, unlike in the old provision where reasons to believe was interpreted judicially, in fact, the explanation 1 to section 148 seeks to assign a meaning to the phrase information which suggests that income chargeable to tax has escaped assessment. It is provided that information flagged in the case of assessee as per risk management strategy of board or objections raised by CAG wherever CAG audit is applicable, that assessment is not completed in accordance with the provisions of ITR. These two instances will be deemed to be information which suggests that income chargeable to tax has escaped assessment. I want to emphasize on the fact that the explanation does not use the word include or it does not use the term that following shall also be. It says that these shall be the information it uses the term means, meaning thereby that it suggests that these are the exhaustive circumstances in which information which suggests that income chargeable to tax has escaped assessment. Also, in the amended provisions, the search proceedings are also to be completed under the 147 provision. So the assessment under 153A will not be applicable in relation to search done with effect from 1st April 21. In case of search matters, survey matters, or where some assets pertaining to the assessee are found in the search of another person, it will be deemed that the information exists with the department which suggests that income chargeable to tax has escaped assessment. So in those kind of cases, there is no kind of flagging required from any department. As I said, the phrase that is used is means, and that may seem to suggest that the scope of reassessment has actually been narrowed down. But I just want to highlight here the fact that in the old provisions, it was expected of the assessing officer to satisfy himself and then record the reasons. No other department like audit wing, etc., could compel the assessing officer to issue the notice of reassessment. In fact, that has been upheld in so many cases as well. Now, any kind of information that is there with the audit wing, which is flagged to the assessing officer, that will prompt the assessing officer to at least initiate the reassessment proceedings. Therefore, the fact that the information can be recorded by some wing as per the risk management strategy, that definitely broadens the scope of reassessment. Now, under the old provisions, it was a settled law that the assessing officer could not reopen the assessment merely on the basis of change of opinion. Under the amended provision, a question which arises is it possible that a particular audit wing or department of civility, they record some information on the basis of which the income has already been assessed in the past, but they prompt the assessing officer to reopen the assessment and thereby compelling the assessing officer or ultimately leading to reassessment basis on the change of opinion. In our understanding, what the provision state is, in the first instance, section 147 provides that the reassessment is ultimately being done in relation to income that has escaped assessment. What was held by Supreme Court in the case of Kelvinator is that the provisions of reassessment do not allow the department the power to review an earlier decision. Therefore, that was an inherent check that has always been understood to be there in the law. And the fact that Section 147 still talks about reassessment in relation to income which has escaped assessment, that does suggest that it is not permissible to reassess only on the basis of change of opinion. Therefore, going forward, even if the information is marked by the audit wing, under 148A, in the first instance, the assessing officer is required to conduct an inquiry and also seek response from the assessee. At this stage, if the assessee demonstrates that the assessee that the particular information was already looked into and this income has already been assessed in the past, the department may disagree with the stand that was earlier taken by the assessing officer, but they do not have the power to review. It is possible to argue that. The next aspect we wanted to discuss is what in relation to the procedure to reopen. Now, as I said, in the earlier provisions, the reasons had to be recorded on the basis of which the reassessment was reopened pursuant to issuing of notice under Section 148. The entire procedure in relation to sharing of reasons and the assessee filing objection was never a codified law. It was held by Supreme Court in JK and Dreyfus. It was subsequently followed by so many courts that it is incumbent on the officer, after having issued the notice under Section 148 and the assessee having filed the return of income, to confront the reasons to the assessee, and it was permitted that the assessee could file objections to that, and the AO had to dispose of the objections before proceeding to reassess the income. Under the amended provision, the process prior to issuing of notice under Section 148 has now been codified. One predominant change that is coming is, in the amended provisions, the information on the basis of which reassessment will be done will be confronted with the assessee before even issuing under Section 148. In fact, there were conflicting rulings of Madras High Court and Allahabad High Court as to whether the reasons should be communicated under the 148 notice itself. So there was some controversy there, but the amended provisions, they categorically provide that before issuing notice under Section 148, the assessing officer should satisfy himself that there is an income that has escaped assessment. And in order to do so, the assessing officer should also provide an opportunity to the assessee and also share the information on the basis of which it is being alleged that the income has escaped assessment. One point that I want to mention is that this entire procedure that is mentioned in 148A is not to be followed in case of search matters or where some information has been discovered in relation to an assessee in relation to search of a third person. So therefore, the entire procedure to reopen is undergoing a change, and what was earlier stated by Supreme Court is now being codified, and this entire process will be done even before issuing notice under Section 148. Lastly, there's a significant amendment in relation to the time limit for reopening the assessment. In the erstwhile provisions, normally the period for reopening assessment was 4 years from the end of the assessment year. In certain cases, the department could go up to 6 years if the income escaping assessment was likely to be more than 1 lakh, and if the income had escaped assessment by reasons of failure of the assessee to disclose truly and fully material facts. In case of foreign assets, however, it was permitted that the department could go even up to 16 years from the end of the assessment. In case of search matters, normally what Section 153A provided is that 6 years had to be definitely assessed, 6 years prior to the year in which search was conducted. In certain cases where the income likely to be escaping assessment was more than 50 lakh rupees and it was represented in the form of asset, the department could assess any of the years between 7 to 10 years prior to the year of search. Now, this phrase represented in the form of asset is very important because in the amended provisions, the time limit though has been reduced to 3 years, but the department can go up to 10 years in cases where the income represented in the form of asset has escaped assessment and the said amount exceeds rupees 50 lakhs. What is the meaning of the phrase represented in the form of asset? We'll discuss subsequently. However, what is provided in the provision is that the asset shall include immovable property, being land or building or both, securities, loans, advances, deposits in bank accounts, etc. So the term asset has a very broad meaning, and only an inclusive definition has been provided in the provisions. The proviso to section 149(1) categorically says that if a particular assessment has been barred by limitations under the old provision, that is to say that the period of 4 years, 6 years, 16 years, whatever the case, maybe that has already lapsed, then the new provisions will not give fresh breath of life to the already concluded assessments. For example, assessment year 12-13 under the old provisions, assuming there is no foreign asset, etc., could have been assessed up till 31st, the notice of reassessment could have been issued by 31st March 2019. Now, the department cannot use the new provisions to say that we can go up to 10 years and assess assessment year 12-13. That is not permitted. Having discussed this, I wanted to now discuss meaning of the term represented in the form of asset. Again, the phrase is not defined in the IT Act, but as I mentioned, the phrase was first used in section 153A, wide amendments which were made pursuant to Finance Act 2017. Earlier, before Finance Act 2017, in case of search matters, the reassessment was permitted only for a period of 6 years prior to the date of search. But the Finance Act 2017 increased this period from 6 to 10. That is to say, the department could assess from year 7 to 10 if there was an income which was represented in the form of asset and said income exceeded rupees 50 lakhs. The memorandum said that this amendment was being made in the interest of revenue, where some tangible evidence was found during the search, which was represented in the form of undisclosed investment in any asset. Therefore, the entire idea of introducing this term in section 153A was to enable the tax authorities to reassess incomes of years in relation to which certain undisclosed investments or undisclosed assets were traced. This was never meant to allow an assessing officer to challenge the computation made by the assessee, to challenge the claims made by the assessee. It was only meant for cases where there was some undisclosed assets. Now, the same phrase has been used in the section 147 also. And while we are discussing this, we also need to remember that the provisions in relation to reassessment pursuant to search proceedings, they have been clubbed with section 147. Any search made on or after 1st April 21, that is to be done in pursuance to section 147 and not in pursuance to section 153. Therefore, it seems that the introduction of the phrase in the term is meant to indicate only cases where there were some undisclosed assets that are found by the department and the source of which is not explained by the assessee. In the budget speech, the finance minister actually, while reducing the period from 6 to 3 years, actually indicated that where there is some case of serious tax evasions, the department can actually go up to 10 years, provided the income which has escaped assessment is 50 lakhs or more. Therefore, in our understanding, the term represented in the form of asset should not be read to say that in all cases, even in case of computational errors, in case of, say, challenge to the claim made by assessee, for example, in case of certain deductions, etc., where things are already disclosed to the department, that even in those kind of matters, the department can reassess. Having said that, it is possible that the department may argue that because the term asset has such a wide meaning assigned to it, even in these kind of matters, because the assessee has a higher bank balance, they may want to reassess, but definitely the assessees will have to contest that and probably we have sufficient jurisprudence as far as to defend these kind of matters are concerned. And then probably the court should also see merit in it. The other question that may arise is, in the old provisions, this period of 10 years was limited only in relation to the search matters. Therefore, can it be argued that even in the amended provisions, this period of 10 years should only be exercised in case of search matters? In our understanding, the answer to this should be no. One, the speech of the finance minister sufficiently indicates that this period is meant for reassessment provisions also, Also, in terms of the scheme of provisions, there's nothing to suggest that the period of 10 years is limited only for search matters. Having said that, the phrase should be interpreted in the context in it which was introduced by Finance Act 2017, and it should only refer to cases where there are some undisclosed assets that are unearthed by the department.